It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, October 29th, 2015. Squeezing out the last few drops of this incredible month we've had of the month of October. Last newsletter video of the week. We don't do them on Fridays. And last newsletter of a very successful month of October. Great time of the year to be alive. I hope you guys had a great week with us here. And don't forget, this weekend, it's kind of a holiday weekend, right? We got daylight savings time coming to an end in the U.S. I know. Turn the clocks back. But we get an extra hour, of course, right, of sleep on Sunday. So make sure you guys don't forget to turn your clocks back an hour. And we also have Halloween weekend ahead. I've been reminding you, I hope you're all prepared for a great weekend ahead. Hopefully we'll get some great weather for all the kids out there. Be safe out there. Now, we have a jam-packed newsletter in store for you guys and gals. Reaction Thursday, I got to say, very, very easy, very tame Reaction Thursday compared to what we were kind of expecting for today. What's the plan for tomorrow? Crude is range-bound and balanced this evening. Buyers completely gave up on it. You see that today late in the morning, right? Crude range-bound, balance this evening. Our plan is very simple and straightforward on a balanced market. Our plan on crude is to fade all the breakouts until we see the two-try rule qualify the new direction for tomorrow. The S&P is bullish. Very bullish, I should say that. Very bullish after buyers defended the pullback today. Remember we talked about it last night. S&P buyers, the bulls defended that pullback, so our plan is to look for counter-trend bear traps for the best opportunities to buy more on Friday. It's the S&P. You know they're not going to make it that easy on you. We'll show you a plan for the E-mini tomorrow. On the gold, the yellow metal is bearish but oversold this evening. So our plan is to stay patient for a deep correction tomorrow and use buyer failures as the trigger for entry back down again. And of course, we can't forget about the euro. The 6E, the currency futures market, is pushing higher off yesterday's lows. But the slowly moving price action today tips us off to a possible bear flag. These buyers, looks like they might be running out of gas to the upside. We'll be looking for some opportunities to catch a break to the downside tomorrow. As you guys can see, we got a plan for crude, E-mini S&P, we got the gold and the euro. Before we jump into today's charts, though, I do want to remind you guys to make sure you're watching this newsletter video right on our trading blog here at sidewaysmarkets.com. If you're watching this video on our YouTube channel, make sure you read the description of this video. There's an important disclaimer in there, as well as a link to take you over here to our trading blog at Sideways Markets. Couple reasons why. First of all, upper left-hand corner, you can grab a free pass. Come out and test drive our live trade room. As a guest for a day next week, grab your free pass in the upper left-hand corner. Also, lower left-hand corner, you'll see a spot to register for our nightly newsletter mailing list. All I need is your name, your email address, yes, a real email address, and then check your inbox. I'm going to send you a verification email to make sure you got the email there. And then, of course, below the video tonight, you can download all the charts I'm going to be using in tonight's video. That way you're ready for tomorrow. And on the right-hand side, you can learn more about what it means to be a member. You can join our free trial. It's not the same as the free pass. You can read member reviews. And don't forget, guys, there's no question too big or too small for us to help out. And we always have someone standing by 24/7, 365 to give you guys a hand. An exceptional day we had today. A very, very good day we had today with all of our students. Hope you guys did as well. Let's jump right in here, wrapping up the week with a Friday session tomorrow. Here's the plan. Crude is range-bound and balanced this evening, so our plan for tomorrow is to fade all the breakouts until we see the two-try rule qualify the new direction. We can see a wedge formed smack in the middle of this range, and with balanced volume, a flat moving average, we can easily see both sides trying to take control. So we'll be suspicious of all the breakouts, yes, all of them, until we see a new direction tomorrow. Let's look at the clues here we see. First of all, we see balanced volume. Right, got a definitely balanced volume profile. You could definitely see that flat moving average right in the middle. And of course, we mark up the highs at 46.70, the lows down here at 45.31. That's going to be your trading range. On top of that, just for giggles, we tossed in a little wedge in the middle. You know, guys, I really don't worry about these wedges too much. really the way I see a wedge is the exact same thing as a range. Fade all the breakouts, right? So those would be the most important things we see here right now. I also just kind of expecting a breakout here. I've got some measured moves overhead, resistance. I've got some measured moves below, right? El Soporte, and of course, as you can see here, we've got those levels marked up. So those are going to be some great spots to look for failures. Let's take a look at the range-bound market notes here. First of all, range rotation. Buy lows, sell highs, buy lows, sell highs, buy lows, sell highs. Right now, look at this trading range. We go from low up to high, and we're on our way down to that low right now. So we'll expect to dig into those lows, just take a little pit stop on the way down, and then we expect price to go back up, back down, back up, back down, and inside that range. That's what range rotation means. Now, looking at this, sell the highs with buyer failure. Buy the lows with seller failure. Buyers go up, buyers will sell it back down when they fail. Price goes down, sellers try, buy it back up when they fail. Next one, fading range expansions. What are range expansions? Well, take this trading range, cut it in half, take the half size, take the full size, take the half size, take the full size, right? So you're expanding them out. We have resistance levels overhead. We have support levels below. We also have those little swings on there as well. Those shouldn't be too important, but we saw a great example of this today in our trade room. It doesn't matter if this thing launches all the way down. That doesn't mean a thing to me. I will still look for sellers to fail and buy it right back up. That leads me into the final rule of a range-bound market, which is the two-try rule. And basically what that means is if it goes up, I'm going to be fading that move back down. But if they try twice, now you got my attention, right? The two-try rule into the breakout. There definitely are some fine details to that two-try rule that we teach to all of our students here at School of Trade, but bottom line is the first time we make a run for it, you got to be suspicious of that breakout no matter what direction it goes. But if they keep on pushing that price lower, right, then we start taking those buyers or sellers seriously. And I'll give you a big hint, right? We use the moving average, we use the candlesticks to define whether or not that breakout is the real deal. Always remember to be suspicious on the breakouts when you see these range-bound markets. We'll be trading that crude market live in real time tomorrow morning. Come out and see us at 8 o'clock in the morning. We open up a trade room. How about the S&P? I'll tell you, the S&P gets the medal for the most bullish of all the markets this evening. I gotta give the buyers a hand on this one. This was a lot easier than we thought, right? You can see, boy, the sellers, they just kept on trying to sell this thing, right? It's not giving up. So you can definitely tell right now this is a bullish market. It's almost like a bull dressed in bear's clothing right now, right? You almost kind of feel like you have one of those stock patterns. You know, these patterns aren't very often on futures, but you know, this is one of those ascending triangles where you just think this thing's going to go bam, right? The problem though is this is the S&P 500 we're talking about, right? This is the smartest minds in the world. These are the most capitalized accounts in the world. So buying this breakout is not advisable. Maybe back in the old, day trading books of the 1980s, you could get away with that stuff, but that's not going to work in today's market. Remember, guys, you got to be careful with all the books you see on the internet being sold. If they're over a few years old, this is a new normal we're dealing with right now. It's too bad, too, because there are a lot of great books out there written on the topic of day trading. I'll tell you, here's what I always tell my clients. The most important books to read are going to be stories of real traders. So you see that professional traders are really just human beings with a simple plan, right, and the discipline to follow that plan. I love books like Market Wizards, Jack Swag, right, where you get to hear the stories about how these professional traders started as human beings, right? And then the other one is I love the books by Brett Steenbarger, right? The Disciplined Trader by Mark Douglas, some of those trader psychology videos. But as far as the pattern trader books like that, got to be careful. A lot of those are written a long time ago, right? And those patterns just are not working in today's environment. You've really got to be careful with what you trust, because a few years ago we started seeing that different paradigm. So we definitely see we have a bullish market right now, right? We definitely have a bullish market here on the S&P. So bullish after buyers defended the pullback. Our plan now, because this is the S&P, right? The S&P is one of those markets going to beat you up if you try to buy the highs. You got to think a little bit sneakier than that, right? So we're going to be looking for bear traps, sellers trying to sell this sucker for the best opportunities on Friday, right? Market feels very, very very bullish. Okay, sellers got nowhere today. They kept trying to sell this high, and you can almost feel them struggling here to sell that high. And there's going to be some stops just sitting right up here, right? So the problem, though, is, again, this is the S&P. It's not going to make it that easy to buy the dips. So the best thing on the S&P, which I tell all my clients, remember, the S&P is the last market you want to start your career on, because it's like playing a pickup game of basketball against LeBron James. You are going against the smartest, most well-capitalized traders in the world, right? They're going to take your lunch money and send you home hungry. So we're going to look for bear traps. We're going to look for opportunities where the sellers try to make a run for it, right, and they get trapped in the wrong side and they get stopped out. So trending market notes right now, measured moves. We are definitely expecting now, will we get there tomorrow? I couldn't tell you this, but that's where we have a projected target right now in the S&P, up around that 2100 big round number. That's just simply your bull spike in channel measured move target, right? And these are very reliable as long as this thing doesn't break down. The breakdown point right now is going to be that 1273 half level right now on this ES chart. The next one is probably going to be the most important for you guys tomorrow. If you're not already in this market long right now, your best bet is going to be looking for measured corrections back down so you can buy the dips, right? Measured corrections back down. Then you want to be looking for bear traps, right? So bear traps mean we go lower, sellers try to sell, they got their stop losses right above those swings, and that's where you catch the bears on the wrong side of this market. Much more challenging than a market like the S&P, where we're just simply buying lows and selling highs. If there's one thing I want you to be thinking about tomorrow on the S&P, that is, wait for it to go far enough to the point where you think the buyers have failed. Then wait for the sellers to try to sell it, wait for them to fail, and that's where you want to be buying this, right? You want to wait for, again, what I always tell people is if you're trading the S&P and it's a trending market, wait to the point where you go, wow, it looks like the buyers are really struggling. That's when you want to be buying, right then. Right when your instincts go, maybe I should sell. No. Get ready for the sellers to try. When they fail, then you buy it, right? This is one of those markets where, again, you got to think like a little bit of a sneaky trader here, because the traders that are trading this market, they've been doing so for a long time. Trust me, a veteran trader of the S&P has earned their stripes. They have. Trust me, they have. And anyone who's just starting out there right now, don't learn that the hard way, all right? Don't learn that the hard way. There are plenty of other markets out there, such as the euro or crude oil, right, that are much easier on a new trader and a little bit easier to navigate. Now you guys have the plan for tomorrow. Again, think bear traps. Think bear traps on this S&P tomorrow. As this price goes lower, right when I start thinking, boy, this feels very bearish, that's when I want to be looking for the sellers to fail, right, and buy it on the dips, right? Those deep corrections. We go from the market that wins the medal for the most bullish market now to the most bearish market. I feel kind of foolish, looking at this gold market right now, because as you can see, what happened? That's way too easy. This was way too easy on gold today. It was way too easy on gold today. Now, gold, remember we talked about this last night, big push down. Remember last night's newsletter? Neon sign, right? Neon sign right there saying, sell me. Well, remember, our plan was to look for those sellers to try and get trapped out, but they did, and they just fell right back down. So, of course, you got to wait for more information. You got more information right here. When those buyers couldn't keep this price pushing higher, that's when you knew, apparently, this was going to be just wrapped up with a big red bow saying, sell me. Way too easy, definitely not expected, and now we have this market cruising lower here today. There's no doubt about it. This is definitely a bearish market. There is no question about whether or not this market is bearish. The question is how far is this thing really going to go before we get some profit taking here? That's the big question right now. So the sellers have easily had their way today, but now we're starting to see some measured moves get triggered here, right? We've got, we haven't pulled back to the moving average in a while. This is one of those times where it's not going to be that easy forever. So right now, combine the measured moves with the gap overhead. Also, another clue on this is this channel. And of course, that channel, we expect channel rotation. We haven't rotated that high in a very, very long time. So I don't want to say we're due, because we're never due. But right now, if I'm going to be a seller, okay, I don't want to be a buyer because obviously we're bearish. Okay, you can be a buyer, but be careful. Make sure you wear your helmet, your mouth guard, and wear some safety goggles when you're doing it, right? But the reality is right now is if I'm going to sell, selling right here is way too aggressive to sell now. We got a great short earlier on in the session when we saw those buyers failing, but that's about it. Now we're well oversold here. We've got measured moves down. We're due for a test of that gap. We're due for a test of that channel. We're due for some channel rotation. The bottom line is I would expect this market to take some profit here, and you know what's going to happen. We're going to go back up, fill that gap, rattle off the highs of that channel, and then call the bluff of the buyers and sell right into those buy stops. They'd be sell stops, but the stop losses for the buyers as we come back down. So again, we're expecting measured moves lower, a measured correction back higher, channel rotation for that sell back down. I got my eyes on that area up here, right? Channel rotation, trap high, measured correction, easy peasy, easy peasy. And then of course, once we get that pullback, that's where the buyers will be looking to fail, and we can sell it right back down. Definitely bearish, but I'm a little bit too conservative to be selling this point right here. I want to see this thing correct back higher and then catch those buyers snoozing so we can sell this sucker right back down in this trending market. Wrapping up here with the euro, I think possibly the trickiest market. We thought this was going to be like playing a fiddle today, but the reality is this is moving way too slowly. Way too slowly. We talked about this last in the newsletter, right? Big drop down off the FOMC report, and we're thinking, hey, this is going to be an easy one, right? Bear spike in channel, we break above it. This should already be back at 1100 right now. Why isn't it? Why isn't it? Look, every time it goes up, it gets greeted with sellers. Every time it goes up, it gets greeted with sellers. Every time it goes up, it gets greeted with sellers. Now, I'm not going to say this isn't a bullish move. But in my opinion, in my experience, what tips this off is a flag. Let's talk about a flag for a second. A flag is exactly like a spike in channel. The big difference is a spike in channel trends down on the channel, whereas a flag goes higher, right? So this is a bear flag. In my opinion, one of the most difficult structures or price formations to trade. It goes against every instinct that we have as human beings. So the flag pulled down tells me sellers are in control. What has to happen now is to make that big push down, sellers are aggressively selling it, right? Thanks to the FOMC report. Here's what gives it away as a flag. This sleepy channel. It always gives it away. And the reason why it's sleepy is because all the sellers are already in this move. So until they get out of their trades, right, until they cash their paycheck, take their profit, and until we entice some more bears, right, bears want to sell high, price will have to come back up, Again, sellers who are already in, they have to take their profit to get back in again. That'll cause price to go higher. Bargain hunters will be buying that drop, right? Big drops, big pops. And so what ends up happening is it's a very tricky, this is much more difficult than a spike in channel, right? Because a spike in channel goes down, channels down. It's easier, right? A spike in channel is easier. A flag, again, it really is difficult. This is a difficult structure. This is definitely going to be the most difficult market for you guys and gals tomorrow on a Friday because the way that you're going to trade this is the challenging part. Okay, so we get a bear flag on it. Now look back at the chart, right? Now you can see that bear flag. Flag down, right? Flag pull down, channel back up. Again, what gives it away is the speed of this channel. It feels like there's no urgency at all. And if this was a news reversal, we would already be all the way back up at that reversal high like we talked about yesterday. Now, here are the challenges that I see. The challenges now are how do we trade a flag? If you think about the structure of a flag, how on earth are you going to trade this thing? There are ultimately two places to trade a flag. One is going to be at the highs. Two is going to be a break at the low. Now, remember those old 15-year-old trading books we talked about earlier? If you read any book written in the last 40, 50 years, you're going to see that they tell you to sell that breakdown. I have the blown accounts to prove it. You do not want to just blindly sell that breakdown. Okay? When was the last time selling the low ever made you money? I know, right? You know that organ in your skull? Yeah, use that. Use that. Selling lows didn't work in 2009 when you sold your home. It doesn't work now, right? It's not going to work very well. You might get lucky here and there, but selling the lowest possible price is rarely going to make you money. So I can't tell you with a clear conscience to sell that breakdown, right? Again, you're going to read all about that in the 1987 How to Day Trade the Futures Markets book on Amazon, right? It might have worked 25 years ago, but it ain't going to work in today's market, especially not in such efficient markets that we have right now. So, now that you know the two opportunities, now think about where you're going to look for this. Here's what's going to happen. Let's take both scenarios. We've got scenario one, I'm looking to sell the highs. The best way, this is going to be the most difficult one. The most difficult place is going to be to sell up at these highs. How are you going to sell those highs? Buyer failure. Waiting for pullbacks and selling into those buyer failure to the pullbacks, right? You're going to get buyers that are going to think this is a bullish market, and it might be, but we know this sluggishness is most likely going to be a flag. So wait for buyers to take the bait on the pullback and sell right into their stop losses. That's not going to be easy, guys. It's not going to be, it never is. Like I said, I'm not going to sit here right now and say this is going to be an easy job on the euro. It's going to be tough. Traps are tough. You've got to have the cojones to sell as this thing is rising higher. Trust me, if it was easy, well, I wouldn't be sitting here right now. I'd be hanging out with Oprah, Branson. I'd probably get Mr. Tesla right down there, my own private island. Anyways, bottom line. So the next option now, this is where the easier money is going to be to wait for the buyers to try to buy these dips and sell into their stop losses. If you want to go one further, wait and see if it holds and then sell the next pullback, right? That's where you really want to be focused on it. So the best way to sell this low is going to be waiting for buyers to show they're trying to buy it. You know where their stops are going to be. Okay, it's where you would place your stop if you were going to buy it. And then you're going to sell right into those stops. That's going to be the first opportunity. The next opportunity here is going to be on the next pullback. That's going to be the one that everyone's going to be watching for. It may also be the most challenging to find the proper trigger. It's going to be a challenging Friday if this ends up being a bear flag. Okay? That's what it feels like right now. So you either have to sell the highs of this channel, or you've got to wait for the buyers to buy the dip and sell into their failure. That's the way you're going to have to trade this market tomorrow. My level here that I'm watching this euro is going to be right up in here. Right up in here, right? This 1040 to 10, right around, because you got a bunch of measured moves right up in here. Bunch of measured moves. Got to have some fun with you guys, right? That puts us higher. Channel rotation up to the highs here, right? So we run up. Buyers try, they fail. That's your first shot. Buyers pull back, they try and fail. That's your next shot, all right, on that euro. And if I happen to get this whole thing wrong, we're going all the way back up to 1100, where this whole party started tomorrow. We shall see what this thing looks like tomorrow. I'll tell you, I can't wait to see what happens in the euro tomorrow. I can't wait. I hope we get a great set of fireworks on this euro tomorrow. Very, very excited to see how this day plays out. So don't forget, guys, anticipating a difficult day in the euro. Again, wait for that deep correction on the gold, on the S&P. I think the dare I say, I know I might get punished for this one. I hope you don't punish me for this one, S&P, right? But S&P appears to be the easy market today. Yeah, put that in the fridge. You're not going to hear me say that very often. And then, of course, crude oil. Crude's probably going to be the easiest one tomorrow. It's a range. These are always very easy. Buy lows, sell highs, and fade all those breakouts until what? Until the 2-try rule on crude. Guys and gals, I hope you see value in my newsletter. I work very hard every day to make this a great newsletter. I would love to hear back from you. Send me an email. I'm at jj@schooloftrade.com. Let me know what you guys would like more of, less of. I won't take it personally. I know you guys probably don't like my bad trading jokes. I won't quit my day job, but send me some feedback. And also, don't forget to share this information with a friend. While you have some free time tomorrow, don't forget to register for our free trial here at schooloftrade.com. I take a lot of pride in the fact that you're going to learn more with me on my free trial than anywhere else on the interwebs. And if you got some free time, don't forget, check out our 3 levels of membership. And we always have someone standing by 24/7, 365. Guys and gals, we have a place for every type of trader here at School of Trade, whether you're brand new or you're a seasoned veteran. There's one thing, though, that we do well. Being successful as day traders is just like being successful at anything else in this life. It's not enough just to know the definitions. You've got to know how to use all these tools. It's like opening up a combination lock. You can't just know the numbers. You got to know the sequence. And that's what we do here at School of Trade every day with our students in our live trade room and, of course, in our chat room, which never closes 24/7. My name is Joseph. Thanks so much for being here. Don't forget, this weekend, daylight savings time comes to an end. I know, right? That's all right. You got to have the night to appreciate the day, right? Mother Nature needs it. So we're going to be changing the clocks back on Sunday. Extra hour of sleep. Enjoy Halloween. Make sure you don't come back with too many cavities, right? Come back safe with all your fingers and toes. Have fun with the kids this weekend. I'll be hoping for good weather for you guys and gals. And we'll see you on Friday morning at 8 a.m. in our trade room. If not, next Monday evening for our next nightly newsletter. I would love to hear some feedback from you guys. That email address was jj@schooloftrade. I'm out of here for now, guys. My name is Joseph. Be well out there and be nice to each other, will ya? Adios, amigos. Bye-bye for now.